So as I mentioned a few weeks ago, I have been receiving an uptick in calls from people off the street who are going through audits relating to things from cryptocurrency to short-term rentals. And here's what I want you to know. If you invest in short-term rentals and you get selected for audit, you need to pay attention to this message because it could really help you. And if it doesn't help you, share it with a friend who it could really help. So one of the biggest things that I and other tax professionals have been running across in regards to short-term rentals is whenever you're going through an audit, the IRS is making illogical arguments. There are some instances out there where the IRS is making the argument that you have to be a real estate professional in order to take your rental losses against your income. This, however, is not entirely true, as there is a carve-out under Section 469 for short-term rentals. Section 469 states that if a rental has an average rental period of 7 days or less, it is not technically a rental activity in the eyes of the IRS. Here's the code section where you can actually find this under. And this is really important because if the activity is not considered a quote-unquote rental activity in the eyes of the IRS, this eliminates the fact that you have to qualify for real estate professional status, as the activity is treated more as a trade or business. Now, under Section 469, you still do need to materially participate in your trade or business in order to treat it as a non-passive activity. And if it's non-passive, then any losses that are generated can then be used to offset other non-passive income, such as your W-2 or other business income. Something else that has been popping up in some of these cases is the IRS agents are actually taking the stance that spouses cannot combine time for purposes of material participation. Because again, under Section 469, here is the reference code in case you want to go look it up, where it specifically states, any participation of such person's spouse shall be treated as participation of such person. It also further goes on to explain that in determining whether a taxpayer materially participates, the participation of the spouse of the taxpayer shall be taken into account. And these are just some of the things that I've been running across. A few other things that have come up in regards to short-term rentals is also the personal use of the property. The IRS is checking to make sure that you either use it for less than 14 days or less than 10% of the total rental days if you're claiming a short-term rental. It's no secret that a lot of times people will get short-term rentals that they themselves want to use, and the IRS knows this. So they are going to double check to make sure that the property is not going to be considered a personal property. Now remember, if you have the property closed down for maintenance or renovations or whatever the case may be, that would not be considered a personal use stay. It's only whenever you actually use it for personal use or you rent it out to family members at below fair market value that it then becomes a personal use stay. And now there's all sorts of apps that crypto investors can use to accurately track their cost basis. But a few years ago, whenever crypto was really taking off, not as many people were being so savvy and they weren't tracking those cost bases. So that's the biggest thing that I've been seeing with my crypto investors is the IRS is really checking to make sure that your cost basis you are reporting is accurate.